moderated. Margins have come off as well, though APE growth slightly higher, but margins certainly off. For stocks, actually these stocks need to do a little bit more on the performance for them to be taken notice. I mean, look at the last 5-year chart, and I think it's kind of been in or around this pack. If you look at HDFC Life, largely around this pack. So that's the issue. Is down about 2% as well in the session today, on the day when the markets are not doing too well. Look at this, 5 years, it's a 22% move, hardly anything. Anyways, let's get to the markets at large and see what's happening here. So IT should come up on your screen after HCL Tech's numbers. Nifty IT, though in the red after being in the green at the start of the trading day today. So that is one thing. Banks are holding out, but ever so marginally. So hovering around the 25,000 mark. It's become a market which gets bought at 24,900, 800, gets sold at 25,200. Bring up the heat map on the screen, and let's talk about some specific names. So on the losing side, the Bajaj duo, Bajaj Auto, Bajaj Finance, both of them down. Wipro is correcting seriously, about 3% lower. Hindalco, HDFC Life after the numbers at the lowest point of the day. Reliance, 2% lower. Tata Steel, JSW Steel. So metals have come off. In fact, looking at it, most commodity names seem to be off. I think the index is partly supported by the move in ICICI Bank, predominantly ICICI Bank, and then the likes of Bharti, Britannia, etc. have participated a little bit. So some of the crude beneficiaries too have done okay, because you see an Asian Paints, you see a BPCL, and all of them doing okay. But largely a lot of gain, a lot of pain at the large cap end. The mid caps and the small caps could be an interesting story, Hersh. And HDFC Life is an interesting story because it's down at the lowest point of the day post the numbers.
Yes, around an 80 basis point decline in margins, around 70 odd basis point contraction, even versus what our estimates were indicating. So it's quite a sharp fall in terms of margins sequentially, Niraj, and that's probably leading to that reaction on the counter. Of course, AP growth extremely strong, and therefore growth obviously on the right trajectory, but margins is where I believe the street really wants to see some bit of performance which hasn't come, and therefore you're seeing that reaction. Now, just quickly on to some other stocks. Earnings candidate first. Let's talk about some of them. Suntech, now not an earnings candidate per se, but just the numbers were standout in terms of the pre-quarter numbers that Suntech took out. Angel One, again, extremely strong numbers. And this one continues to clock very, very good numbers. They've guided for a 45 to 50% on the margin front as well. So they don't expect a margin dilution after SEBI regulations. And they are also expecting a knock on their numbers after the SEBI regulations, but they believe that margins will remain intact. So that's, again, a key positive. The stock on a tear now was up just about 7 to 8% in the morning. Reached a high point of 17%. So that one really in focus. PVR Inox, the other one, muted set, but stock doing fairly well, 2% higher. Newgen Software, again, Newgen Software numbers were really stand out. Stock down 5%, likely some profit booking happening there. But that's a huge contraction in terms of what we've seen in the stock price post the numbers. Now, in terms of corporate announcements, Sterling and Wilson was one company credit rating upgrade, stock up, locked in upper circuit 5% higher. TD Power winning around 140 odd crore of 2 orders, 2 contracts, and therefore that one also 5% higher, 6,000 crore in market cap, and roughly 15 to 17% margin business. Stock on a tear on the back of that, a couple of order wins. In terms of brokerage notes, lots of them today, frankly. Something like a Neuland is up 9%, BNK initiating coverage, Time Techno on the back of a systematics note up 4%, RK Forgings on the back of a very bullish UBS, very detailed and very bullish UBS note, stock up 2% as well. So lots to talk about, Niraj, on the back of all of that's happening in markets today, even though it looks like a fairly muted day.
Talk to our guest about that. Kush Bora, founder at kushbora.com, with us on the charts. Kush, good having you. Thanks so much for joining in. Aditya Agarwala also with us, by the way, on the charts. So good to have both of you. Maybe we'll take banks with one of you and the Nifty with one of you. So, Kush, let me try with you. Banks, Nifty or Nifty Bank, either one of the indices. Give us your view.
First of all, it's a very good afternoon, and thank you for letting me have that choice. And I'll take the easier one, which is Bank Nifty. Nifty's been consolidating, so I'll let Aditya talk more on that. But Bank Nifty, Niraj, I'm sure you'll concur. We've been a little bullish on this one, at least compared to Nifty for a while now. Even yesterday when we spoke, I think threshold level was 51,500. That was taken out. And the Bank Nifty rallied. After that, even today we are seeing a very clear positive divergence versus what the Nifty is doing. Now, given the expiries around the corner, the weekly expiries around the corner, there is, writing at 51,900, 52,000. So that might act as a near-term resistance, but I'm not too concerned about that as long as the trajectory is upwards. For me, the next key level to watch is 52,500, which also happens to be the 20-day moving average. So if you have a long position, continue holding on to that one with a stop loss near 51,400 for targets of 52,500. If you don't, you might as well consider initiating a long position on the Bank Nifty. So the trade on Bank Nifty is fairly clear, which is on the long side. And with this, over to Aditya for Nifty, I suppose.
Okay, let's do that. Over to Aditya for the Nifty. Aditya, good afternoon. How are you looking at the Nifty today?
Afternoon, Niraj. Thanks, Kush, for that. Not a problem. Nifty is something that I would like to give a view on. So clearly, as we can see, 25,200 is acting as a major hurdle, and that needs to be taken out for the Nifty to scale past levels of 25,500 and inch closer to 61.8%. So Niraj, I think I'm not too bearish on the Nifty at the moment. Maybe I'll watch out for 25,000 to about 24,800 zone. That happens to be the key support area for the Nifty. And from there, it's trying to bounce back on multiple occasions. So I will not trade the Nifty at the moment for sure. I will watch out for either a support or maybe a breakout above 25,200. That will give me a clear trend all the way to 25,500, 25,600. On the downside, maybe if it comes close to about 24,900 is where I can initiate a fresh long, maybe with a small 100, 150 point stop loss and look for a pullback to levels of 25,200 and beyond that. At the moment, I don't expect the Nifty to break down immediately and go below the recent close of 24,700. I believe that trend will come, but before that, markets will see an uptrend close to about 25,500 or maybe 25,600 as well.
Okay, gentlemen, we have a management waiting too. So very quickly, your stock recommendations. Aditya, I'll come to you first.
So I've got a couple of buy ones. The first one is Siemens. Looks extremely bullish to me, Niraj, on the verge of a breakout from into fresh all-time high for a target of 8,100 with a stop loss at 7,700. It's a long trade. The second is from the brokerage name because it's clearly buzzing around 5 paise, something which is looking interesting to me for a target of 620 on the upside with a stop loss at 536 on the downside. Okay,
Kush, your ideas for the day?
One long, one short. Ipca Labs continues to impress. So that's a long trade with targets of 1785, 1885, stop loss at 1585. Sun TV weakness persists, has broken below some of the key support zone. So 765, 755 are your targets. 785 is where you place the stop loss.
Okay, we'll get in the management of Gopal Snacks in just moments from now, and my producers will alert me once they are ready with us. But while we wait for Gopal Snacks to come on board, good time to get in Mihika, my colleague, to talk about the stock of the day, which is Angel One on the back of some very strong numbers. Mihika, take it away.
Yeah, it's a good set of numbers across the board. Gross revenues are up 44% on an annual basis. Earnings before depreciation, but after tax has also seen a 42% uptick. Margins have improved significantly to 51% versus 37% last quarter. And this was mainly due to lower IPL costs, and net profits have also seen a 38% jump. Now, in terms of revenue growth contributors, well, the interest segment does stand out, a 98% annual growth. And the broking segment that contributes most in terms of revenues has also seen a 28% uptick. Now, like I mentioned, there have been certain particulars that have impacted margins in a positive way. First one is an increase in revenue, which is positive for margins. Second one is a decrease in expenses, which is also positive for the margins. Then there's an increase in employee costs, which is negative for margins, and the increase in ESOP costs is negative as well. Now, current clients stand at 2.7 crores, which is a growth of 11% quarter on quarter. When you look at the customer acquisition of the company also, over FY20 to FY24, we can see a gradual growth. We did see a dip in FY23, but in terms of Q1 versus Q2, we have seen an uptick. Unique SIPs have also seen a growth. In FY23, they stood at 1.08 lakhs, and now they're over 2.31 lakh crores. And lastly, when you talk about con call highlights, well, the company has stated that the SEBI regulations will have a 14 to 15% impact on top line, but the continued growth in their customer base, which is what I just talked about, will offset the regulation impact, and they expect their overall margins going going forward to be around 45 to 50%.
All right, overall margins 45 to 50%. At least that's what's keeping the stock buoyant in trade today, despite all of that's happening on the regulatory front. But let me switch focus. We have Mukesh Kumar Shah, Chief Financial Officer at Gopal Snacks, here to talk to us about Q2 numbers. So let me start off with that margin number. You know, you've guided for 11 to 13% kind of margin number. You've come at a slightly lower end of that guidance. Talk us through what's happening. Is this a one-off? Do we expect margins to revert back towards 13%? Is that something we can expect in H2?
So before margin, I'll just talk about revenue.
Yeah.
So revenue is something which we are growing in double digit. If you see year-on-year growth has been substantial, 13% growth. When it comes to margin, I have given the guidance of 11 to 13%, and we are in that range. You have to see the price of raw material, which has gone up substantially when we compare Q2 of last year versus this year. China price has grown up by close to 15%. There is an increase in palm oil price as well. However, the increase in raw material prices, to some extent, we have taken a corrective action and reduce the grammage to certain extent to negate the margin, to negate the impact. In H2, while 68 to 70% of raw material cost is not in our control, while there is a significant change in the price, we take the impact, we negate the impact to some course correction in terms of prices, grammage, etc. But still, I will maintain my guidance of EBITDA margin at a range of 11 to 13% at a finance overall FY25 level or financial year FY20. Okay.
So these raw material costs, largely palm oil, is that what's really impacting your number?
So there are three major raw materials which constitute 70% of our raw material cost. One is chana, which is close to 25% of our raw material cost. Then oil, again significantly 24%, and there are packing material, laminates, etc. While there has been some reduction in price of laminate in Q2 compared to previous year, but chana and palm oil has stood up very significantly. In September also there is a hike in the import duty, which has increased. The import duty got increased from 5% to 25%. While we have taken corrective action in month of September by grammage reductions, etc. But still, the raw material is something which is not in our control. So the margin will be in the similar range.
Mukesh, what's the outlook on growth? I mean, one, for the second half, because we are in the festive season as well. So does it bump up slightly more from what you've done in quarter two? And I was reading a note which said that your FY24 to 27 growth CAGR is about 15% odd. Is that a reasonable estimate, or is that being conservative?
So H2 is going to be better than H1 and Q2 for sure, because being festive season Q3, and already we have built up in terms of our footprint expansion in focus market. We have done a lot of efforts in our core market, which in Q1 had shown a growth of 3%, and subsequently in Q2 we had witnessed 6% Y-on-Y growth in core market, and we will definitely have higher growth in Q3 and Q4 coming from core market. And focus market is something where there is a growth close to 29-30% year on year, and which will continue to be there. So H2, one being festive season, and because of the infrastructure and manpower teams we have built, definitely H2 is going to be much better in terms of growth compared to H1.
Okay, and I believe some of your hero products are a very I mean, they are maybe consumed across the other countries, other states as well, but they are favorites of a particular state or two. So do you envisage a multiple hero product kind of a strategy as you expand into other states for growth? Or do you believe that the same products which are working for you beautifully in the one or two states which you are mainly present can be expanded as the main product into other states?
So while we keep on innovating new products, we have introduced a couple of regional products in last couple of quarters. But having said that, Gatia, something where we are market leader, where you meant Gujarat having higher consumption of Gatia. but we have witnessed a higher demand in UP and Jharkhand. When we approached UP and Jharkhand as a market, 75 to 80% of our billing for Gatia is only from UP and Jharkhand. So people are accepting our hero product outside Gujarat as well. And we are seeing, if you see our Q2 performance, there is close to 16% volume growth only in Gatia in Q2. And wafer is something which is growing by close to, growing close to 45 to 50%.
Right. So of course, raw material prices going up, volumes you're doing 16%, revenue you've done 13%. Just talk to us about value. You expect pricing to see a significant increase, and if at all, how much, if you can give us?
So when you say pricing, you mean, so we are into 5 rupees, 10 rupees SKU. So it is a currency for us. We cannot increase the price for 5 rupees going to 6 rupees or 10 going to 12. So whenever there is a change in the price, it is only through grammage. Having said that, there is close to 10 to 12% of revenue is coming from higher pack, where there is a possibility of MRP increase in MRP. Whenever it is only because of raw material prices, etc. However, on the back of host of backward integration facility, our cost of production is always lower compared to any other player in the industry.
And sir, with regard to new product launches, anything in the pipeline?
So currently we have a couple of products, but it is a process. It takes time. It goes through research, development, lot of testing, etc. So I'll not commit on any new product coming in near future, but definitely there are few products both in our Christos brand as well as outside for Gopal brand we have in pipeline.
Okay, now you've commissioned a new raw material processing unit as well. You're expanding pan India. For FY25, you've given a guidance of 11 to 13% on the EBITDA front. I was looking at estimates which firmly put your numbers over 13% but under 15% a couple of years out. I see competition at maybe 15 to 17%. Would you believe that you will stay in the 11 to 13% band, or in the next 2-3 years there's a possibility that you may enhance margins even as you're expanding?
So we will enhance margin definitely when you get into FY26 and FY27 arena, because the reason being 5 rupees SKU, which is currently contributing 70% of our revenue, slowly will come down to close to 60% and 55%, and the higher pack will take a place there. So in the higher pack, you have the opportunity to do price increase, etc. Similarly, we are increasing our base in alternate trade channel. For example, all sort of e-commerce, quick commerce, catch commerce, modern trade, railways, etc., where larger denominator packs are being sold, which has a higher margin to us. Thirdly, our wafer market, which is currently at an annual run rate of 200 crores, is growing at a very fast pace, close to 40% in terms of volume. And we expect this volume growing at the similar pace in the years to come, and which has a higher gross profit margin compared to any other product in our basket. So overall, having said that, and even our capacity utilization is close to 40% currently, with the increase in the sales, etc., we will leverage on operating expenses, which is more or less fixed in nature. So this all benefit is going to give us a higher margin in after I'll say FY26 and FY27.
You expect it to go out to about mid-teens, 15% odd in FY27-ish?
14.5%.
14.5% by FY27, something like that.
Yes.
Okay, good.
So, and you suggested you were also into backward integration. You're one of the few players doing that. How does that give you a leg up? If you can just give us.
We have our basin plant, which is close to 125 metric ton capacity a day. Then we have our own India's largest snack pellet manufacturing unit. We have India's largest cold storage unit, which is again located in the heart of the potato crop area at Modasa. We have our 270 plus own fleet. So this all put together in terms of margin, etc., we get 2% edge at a current revenue. 2% of the benefit we derive from backward integration, and which is scalable also. So with the growth in revenue, etc., we can scale on backward integration as such. So it is not only the profit margin, but also it helps us in maintaining a stable quality parameter, because all our sourcing of raw materials happens directly from farmers and APMC, and so we give a bulk order. We do a stocking of the crops, commodity, etc. whenever there is a crop season, so which help us in maintaining the prices. So our prices is always lower compared to the existing market price. So that's the depth of backward integration we have.
Fair point. Thank you so much, sir. Good speaking with you. Great getting perspective.
Thank you. Thanks.
Right. Let's switch focus though. HDFC Life down 3+% now. Seeing a bit of pressure on the stock after those numbers. I also want to welcome on board Vineet Bolinchkar, Head of Research at Ventura Securities, joining Kush and Aditya, of course. But first off, on the numbers itself, just to kind of give context and maybe then take Vineet's view on this one. APE growth slightly above what we were penciling in, maybe 1.5% above what we were penciling in. It's still a reasonable growth, 27%, but really the knock has come on the margin front. VNB just about 17% year-on-year growth, and margins therefore have contracted from 26.3% same time last year and 25.1% in the last quarter to 24.3%. So it's a 2% reduction on a year-on-year basis, 80 basis point reduction on a sequential basis, and that's likely why that reaction on the stock, because persistency, at least on the 61st month, has gotten actually better and sharply better. But the stock really not reacting well. Vineet, just quickly your perspective. This margin decline expected, but it's more than what the street was anticipating, clearly. Do you believe it's fair given the kind of growth that some of these life insurers are clocking? Do you believe that margin decline was the obvious kind of outcome? And do you also believe that they can recover those margins going forward?
So, first of all, we should congratulate them on achieving a high growth. Other players are struggling in the market to get growth. And obviously, that growth has come at the cost of margins. So the competition is very intense, and they've done well on this growth front. So I believe that, this stock should be bought on declines. And going ahead, we expect the margins also to recover. Right.
Okay. Vineet, how much can it recover in your view? Because growth, of course, I give HDFC Life credit on a higher base, stronger growth. But can margins come in at 25% plus consistently? That's really the question I think the street will be asking.
Yeah, so we'll have to just wait and watch for the commentary, what they deliver in the con call.
Yeah.
And we can take it up from there. But they've done consistently quite well. So, this can be a one-off event on the margin front, and it should be taken with a pinch of salt.
Any other, parts of the number which, or rather the results that you felt is creating this drag, or 3% warranted on the stock today?
So, I think it's a combination of sentiment and also it's underperformance to expectations, which has rolled the stock down. But I think it will eventually claw back.
This current embedded value being below 3 times, not sure the last time I saw it, something like an HDFC Life below 3 times, except maybe the last year or so, where a lot of life insurers have taken a bit of a hit given regulatory overhang, tax, etc. Do you believe these are buying opportunities for companies like an HDFC Life?
See, if you see the BFSI space, there is cutthroat competition in the banking space. They're struggling for growth, deposits. If you see the NBFC space, it's a mixed bag. Insurance is one sector which has got sacrosanct growth. And hence, we would, between the BFSI space, be more concentrated long on life insurance companies, and SBI Life and HDFC Life remain at preferred place.
Okay. Well, 3.5% lower though. I think Vinith's summation is that the stock looks okay. I'll tell you just before we hit that break though, or maybe let's hit that break. We come back from the break and talk about some key movers in trade. Stay tuned.
Welcome back. You're tuned into India Market Close. Thanks for staying with us. Quickly moving on to one stock which is on an absolute tear today, Neuland Labs, on the back of a note by BNK Securities. Varsha is here to break down the note. Buy rating 42% upside. Varsha, just talk to us about what the thesis is.
Well, yes, Hersh. So BNK has maintained its buy rating with target price of 20,000, means an upside potential of 42%. Now, the whole report revolves around one product, that is Car XT. Now, US FDA in September has approved Bristol Myers Car XT product, which is used to treat mental disorders. Now, this drug is developed by Karuna Therapeutics. Now, Bristol Myers bought Karuna in Q3 FY24. Now, why we are speaking about Neuland here is because Neuland partnered with Karuna Therapeutics since Car XT's phase 3 trials in 2019. Now, BK is expecting Q2 FY25 part to surpass 65 crore due to this product, that is Car XT product. Now, Car XT's peak sales could exceed 5 to 6 billion US dollars. BK is also positive on the other segments, that is CMS, that is custom manufacturing solution for the company. So the key products, the two key products are actually will aid growth for this company, one of which is bempedoic acid, which is used to reduce bad cholesterol. Now, overall, if you see, BNK has a positive outlook basis strong CMS pipeline. Neuland has almost 91 molecules in pipeline, and also Neuland has got a change in sales mix towards profitable products, which is leading to superior EBITDA margin of 30% plus. Also, lastly, BNK is also expecting 120 crore free cash flow for adding capacities at existing units.
Okay. Varsha, thank you so much for bringing this piece of news to us. Neuland Labs on a Batliwala & Karani report up 8.5%. Aditya Agarwala, is there a trade here in Neuland Labs, or has it run up too much already?
I think it has run up too much, Niraj. Just going purely by the chart setup, I wouldn't be interested in going long at current levels. For me, the risk to reward is not in favor. Maybe on a decline closer to about 14,800, 14,500 is when I could be interested in the stock, not at current levels.
And Kush, we didn't get a chance to talk about Angel One, did we? Just the stock on a roll, another level. But has it done too much already? I mean, if you were long here, would you book profits here?
I would book profits at least partially, because if you see, across time frames, at least on the daily basis, daily charts, the stock has actually hit or very close to the, overheated territories on the weekly setup. There is still some time, but with the kind of run that we've seen over the last, 2, maybe 3 weeks, not a bad idea to book partially. There is momentum, could take it higher to 35, 3600 levels also, but I would book partially and ride the momentum, ride the wave with, whatever left, with whatever quantity I have left, about 50% of it.
Vineet Bolinjikar, this this whole capital market play, right? Brokerages like Angel One doing well, Motilal Oswal doing well. The last few days, BSC has been doing very well too. HDFC numbers, HDFC AMC numbers look pretty strong too. What is your favorite from amongst this listed brokerage or listed capital market plays?
So if you're talking of brokerages, we definitely go with Angel One. I think the numbers are out of the park. They come off of a bad period. We saw the P/D rate, and now, it's picking up growth again. Very, very strong numbers. Trends look very intact. And this would definitely be the topic among brokerages. And if you're looking at financial plays on financialization, I think KFIN is one of our topics. We think they've got this figured out really well. And they have an opportunity to, in the international markets, to play it big, because here, if the clearing rates are about 1% margins or 2%, in the mother market of the US it's about 20%, and they can even if they come in at 8%, they can do a great big deal. Also, the markets are very big. We expect some kind of this is a optionality on the stock. Given that, we think this stock can continue to perform from here.
Okay, let me switch focus. Suntec Realty has been buzzing in trade all through the day. In fact, solid second quarter update coming through. Let me bring in Anushi, more details on that one, more context. Anushi.
you look at Sunteck is in focus, and this is on the back of the strong Q2 business update that we are looking at. You've mentioned about pre-sales, which has recorded about a 32% growth on a YOY basis. It's also collections have seen about a 25% growth, and this is in line with the guidance as to what the company has been aiming for, which is the 30-35% of a pre-sales guidance that they are striving for in FY25. Even if you look at collections and go back even the last 2-3 years, collections have remained in this 24 to 25% of a range. Taking the H1 FY25 numbers in consideration, also the pre-sales stood at about 1,026 crore. This is 31% growth, and collections about 609 crore. But to talk more about how the company is doing in general, also if you look at the gross development value, that has been on a strong foothold for the company. It's about 37,000 crore of a gross development value, and it only aims to almost double this down by the next 3 to 5 years. So watch out remains on the new launches that the company will be coming out for, not just this year but even the next year onwards, as well as how that will translate into the pre-sales trajectory going forward, and if the management will up their guidance forward. Nuvama also maintains their buy call in this one, seeing a 27% of an upside potential, seeing more launches taking place in the upcoming quarters. As mentioned, this is on the back of the strong GDV value, and also they do note that the collection efficiency did slip to 59% as compared to 64% in H1 FY24, but still remains on a healthier level. So again, if you look at the debt situation, the company has remained net debt cash free over the past year. So the Sunteck Realty is in focus on the back of the Q2 numbers that we're looking at.
Okay, Sunteck and real estate doing very, very well. Vineet, any specific names that you prefer within the realty pack, and overall how are valuations stacking up?
No, we are constructive on Sunteck Realty. We have coverage on that stock, and we believe that over a period of the next couple of years, the stock can go to 800 levels. If you look at a couple of things that the company has been doing, is that their GMV has been consistently growing, and they've started new projects. The headwinds which are there around their BKC properties, that is now no more. So I think they're in a sweet position on the cash side, and new project launches augur well for the company. So we think that they will do really well going ahead.
Okay, I want to quickly also take a view on charts. Kush, this one, Sunteck 7% higher. We've seen a very strong move in trade today.
So Hersh, I'd wait for initiating any kind of fresh trades. The broad range on this one for a while has actually been 550 on the downside and about 610, 615 on the upside. Now trading closer to the upper end of the band, so the risk reward ratio won't be favorable. The way to trade this, or perhaps to when to consider the fresh trade on this one, is once it crosses the 615 threshold, the supply pressures are over, and then the stock moves further up. So wait for 615 to be crossed. Up until then, if you have an existing position, you could continue to hold with a stop loss at around 580, where there is convergence of a few key average levels. Fresh trades should be initiated beyond 615.
Okay. What else? I was for the fanfare that we see around SpiceJet, the month-on-month aviation data that has come out isn't necessarily the strongest, and you don't expect any just this September month data to be strong. I think the thing to notice will be whether October data looks solid or no, because for September, SpiceJet market share is at 2% versus 2.3%. So it's one way to look at it is that it's really at the bottom, and from here the only way is maybe higher if it can get its act together. This is of course domestic, but then Indigo, Air India, Vistara, strong, formidable players. The only question is some of the routes that they have, and can they actually make the most of it? I wonder, Vineet, do you have thoughts here on SpiceJet as a high risk tactical investment? Does it make sense?
I think it's the best airline stock to own currently. They got a fresh injection of funds. They're getting 2 more aircrafts on in their kitty, and so we expect this stock to do well from here. Breakout of 70 levels, I think the stock can start performing really well.
Vinit, what's the logic? Getting funds is one thing, right? What will it do which makes you, or what's your thesis which makes you believe that it's the best airline stock to own?
So, see, all the other stocks are valued at premium. This is available at distress valuation. In spite of, several years of negativity, the company has still been around. The number of planes that they have is now going up. Assets are going up. So it's all about owning the assets, increasing throughput. And now since they have the assets, they will score better in terms of quality of service and time of service. And, there is, if you've been traveling of late, you'll realize that India has also been suffering from 2-hour delays, etc. So, that levels the playing field, and no one then talks about bad quality of spice versus Indigo. And then after all this negativity that is built in where the company was written off, if it is getting funds, it's improving its, portfolio of airlines, planes, then obviously you can say that there is a blue sky scenario unfolding for the company because now it's on the recovery track.
Okay, take your point, Vineet. Quickly switching focus, another note on our radar today. Systematics came out with a note on Time Techno. Firm has given it a target price of 615, 56% of an upside. But of course, stock is up 4% today. Varsha's here. Varsha, just take us through the thesis there.
Well, yes, Hersh. So we are speaking about 56% upside potential. Now, the whole note says focuses on value-added products by Time Techno Plus. Now, the Systematic is optimistic on its value-added composite products like LPG and CNG cylinders, and also industrial packing like drums and jerry cans. Now, these higher value-added products will drive return on capital employed and cash flows for the company. And Systematic is expecting the share of value-added products to increase to 35% of total revenue by FY27. And they are estimating 27% CAGR to PAT from FY24 to 27, driven by these value-added product segment. Company is also aiming to be debt-free by FY27 and is expected operating free cash flow of around 400 crore plus. Now, despite annual capex of around 170 crore, the pre-tax ROC, that is return on capital employed, is expected to expand from 16% in FY24 to 23% in FY27 due to healthy operating performance, improved plant efficiencies and lower net working capital. Also, company is planning to divest 250 to 300 crore in non-core asset by FY26 to fund growth and reduce debt. Systematic has also highlighted risk, which is potential delays in orders for composite LPG and CNG products, which could impact all the estimates that Systematic has made.
Okay, Vineet, if I can ask, if you cover this, does this look interesting to you at all?
No, definitely it looks interesting, and their new, then value-added products where they're talking of tanks for, liquid LNG. But I think that is a little too far-fetched out. We are not seeing steady ramp-up of LNG happening so far in trucks. So it will take a little time for the story to pan out, but definitely one of the very good place to keep on a radar and buy in weaknesses.
Operating free cash flow of 400 crore on a market cap of 9,000 crore, fairly valued as well, you believe, and doable?
That's what I'm saying. As a concept, it's an expensive stock. So at these levels, whether I want to buy it, I'm not very sure. I will buy it on weaknesses.
Okay.
And I will also want to ensure at that time that the ramp up of LNG tanks is going at a swift pace.
Okay. Some more stocks which I wanted to highlight. Apar Industries is having a good move, a bit of a breakout move in the last few minutes of trade. Wonder if Aditya or Kush have a view there. So that's one to note. Red Tape is the other one which has had a good move. Zydus Wellness, KNR Construction, some stocks are really zooming in trade. Red Tape for 2 days on a trot now has actually been doing well. Kush, any thoughts on any of these names, 3 or 4 that I spoke about?
So you're right. Red Tape has been on our radar as well. It's just that it's shot up, too high, too fast, to translate into a trade. So anyone who's got a position should enjoy this ride, perhaps even consider booking partially, because it's now hitting overheated territories. The volumes seem to be cooling off a little. I mean, today and yesterday the volumes were high, but compared to yesterday, today's volumes are practically half. So there could be some cooling off that might be around the corner. So you should consider booking profits partially, at least on red tape. As far as APAR Industries is concerned, there was a good round of profit booking. The stock's broken above the 10,650 mark. I think there is still further room for an up move on this one. Perhaps even 12,000 could be considered as a positional target. So APAR Industries, if you don't have, you can consider a stop loss on this one. Positional comes in about 10,100. Strong move. The stock is no stranger to sharp dips, but then the recovery also has been pretty exciting in APAR Industries. Should continue to do well up until the levels of 12,000 and higher.
Aditya, couple of others. Galaxy Surfactants, big move there. You can also take one from the list that I just mentioned, by the way. But Galaxy Surfactants is the new one that I'm including because it's a big mover in trade, as also is Sharda Cropchem.
So I'll pick KNR Construction as well, Niraj, because I think that's a stock which has formed a base after a good up move. Stock witnessed a bit of a correction, took support at 200 EMA. From there, it's bouncing back. So at current levels, it definitely offers an excellent risk to reward. At current levels, we are recommending this stock as a disclosure to our clients. With the stop loss just around 300, 305, one can initiate a fresh long at current levels for a target of 360, 400 on the upside. The second one, yes, Galaxy Surfactants also looks interesting to me. I think this is one stock which is yet to break out from a rounding bottom, or we can call it a cup and handle pattern as well. Above 31.30, 31.40 is where I see a breakout, fresh breakout on the stock. But I preempt a breakout at current levels looking at the chart setup. So with the stop loss just below 3,000, I would be a buyer in the stock for a target of at least 3,400. And if that is taken out, I think Galaxy Surfactant can test levels of 3,500 as well on the upside.
Kush, before I go to the next one, a 5-star business up 9% now, all-time high. Interesting. Splendid move on this one. I have a feeling that there could be some trigger around it, which at least I'm not aware of. But a very good move for a fresh trade. I'm afraid perhaps the risk-reward ratio will not warrant any kind of a fresh trade on this one. But again, good move for anyone who's got the counter, who's holding a position in this one. We should continue to hold on. I think there's still some distance before it sort of reaches overheated territories. About 920 is the next level to watch for. But as I said, the support comes in at about 850. So from a fresh trade perspective, the risk-reward ratio doesn't make sense. But yes, if you've got it, continue holding. 920 and levels above that are the next levels to look for. Okay, switching focus. New listing, Garuda Construction. Listed at a 10% premium. Spoke with the managing director of the company, Praveen Agarwal, and he spoke about his plans to utilize the proceeds of the IPO and his post-listing plans. Here's what he had to say.
As we are a very focused EPC company, so we have almost doubled our order book since the filing of the DRHP. And we are doing very, very specific niche structural projects. So we foresee a very, very good future for us. And we are going to work very hard and strive hard to achieve the goals that the company has set for us.
Vineet, interesting one, Garuda Construction. Would you go out and buy it if you didn't get lucky enough to subscribe?
Well, I don't track that, so won't.
Sure, and within EPC, there's been plenty of chatter, right, Vineet? There's just been so many order wins coming through. We spoke about something like a KNR Construction making a solid 4% move today. But even outside of that, PNC Infra has been in focus. You've seen Ashoka Buildcon, win order after order. Any ones in particular in the infra construction space which looks attractive to you?
So I think, KNR is very strong on the risk-reward ratios. Valuations are very cheap. They've got a good order book. And, the management is best in class. So all three stacking up makes for a very, very good trade from current levels.
Okay. It's 3:20. Kush, let me come to you with regard to BTST ideas picks.
Sure. It's from the cash segment. NIIT, this stock has been making very interesting moves over the last week or so. The volumes have picked up. Yesterday the stock closed above the 20-day moving average. Today it's sustaining comfortably above that, off the highs. But I'll take that because the volumes have actually shot above, the monthly average volume mark. Given the risk reward ratio, I think the stock could hit 200 plus levels also. But from a near-term perspective, if you're looking to enter into this one, I think you could look at a target of 186 and your stop loss comes in at 174.
Okay, Aditya, yours for this afternoon?
So we've discussed one Hersh already, which is KNR Construction. I'm still constructive on that. The second is from the real estate pack. It's Godrej Properties looks very interesting to me on the chart setup. After good consolidation, stock is up and away. At current levels, one can initiate a fresh long for a target of 3,300 on the upside with the stop loss at 3,100 on the downside. Looks like there's more room on the upside definitely here.
Okay, so those are some stocks for the BTST trade. But we'll switch focus. Another earnings candidate, PVR, reported a loss of 11.5 odd crore rupees in Q2 versus a profit of roughly 166 crore rupees same time last year. We spoke to Saurabh Pant of PVR Inox about their outlook on operating margins. Here's what he had to say.
I think you hit the mark spot on. So obviously this is a high operating leverage business. And as Mr. Kumar mentioned, we have a huge lineup of 10 poles that are lined up for the second half, right up to Q4. As the revenue picks up, operating leverage also kicks in, and therefore you will see a significant improvement. You should see a significant improvement in margins going forward.
Vineet, constructive on PVR, your sense?
I'll stay away from the exhibition space. There's not too much happening in terms of, movies doing well. I think it's a pass for me.
Yeah, not surprising. I'm not surprised with this answer at all, but yeah, it clearly shows. Actually, if you haven't taken the closing strategies, just take them once, and then I want a view on Mastech. So since you've taken the closing strategies, wanted to take a view on Mastech because today there is a large block that seems to have happened. The volumes on Mastech have expanded. Look at that size of volumes relative to the 10-day average, and the stock is now up about 5.5%. So really strong show. Good hands seem to have bought into this. I would love to know first a trading opinion here. Kushbora, Mastech. Would you buy it at these levels, 5.5% higher?
Definitely a very good move. But what's heartening is that, this hasn't come out of the blue. This has come after a very strong base formation around the 2650, 2700 mark. The stock was on the way up, and then you've seen this kind of a breakout. I think this momentum is here to continue. If you haven't got a trade, then yes, you can look into it. Your targets here will be 3080, and once that is taken out, perhaps even a 3150 as well. This momentum, could well continue for some more percentage points. On the downside, the stop loss comes in about 2850, 2830 kind of levels. So with this momentum, the risk reward ratio is still in your favor. So Mastech on the way up with the momentum behind it can still be considered.
Any thoughts here? Seems to be a large clean out trade today with a large FI exiting. I think must be Capital or somebody else. Any thoughts on Mastech?
If you look at all the tech stocks, definitely there is slowdown in the international business. As far as UK is concerned, Mastech has a unique play getting a lot of government contracts. So I expect Mastech to outperform this pack of IT stocks, and it's already showing in the price.
Okay. Fine. That's the view on Mastech. Wonder what Biocon is doing. I just want to pull that stock up as well. Let's just see what the stock is up to. 1.5%. A bit of a spike there. 352 and counting. Any thoughts here, Vineet, on Biocon?
Definitely would buy it. Given the fact that we expect a strong pipeline delivery taking place in the next couple of years.
Okay. So that's on Biocon, 1.5% higher. Aditya Agarwala, quick thoughts here. Biocon.
Not yet. I would wait it out some more time, Niraj. Maybe above 361, 362 is where I feel the stock will enter into a upward trajectory. It's still into a consolidation phase for me.
Right. Kush, let me come to you with regard to Reliance Industries. Post the numbers, of course, stock not doing as well. Just give us your view with regard to technicals. We're just off the low point of the day on that one.
So Hersh, here is a bit of a concern now because the stock had supports at 2750, 2700. These were the near-term medium support zones. Now once those are taken out, you're looking at slightly deeper levels. Perhaps even at 2630, 2600. Which happens to be the next support zone. This fall has come on the back of very sharp, very high volumes. So I wouldn't venture a trade just yet, even if I'm looking to enter into this one for, let's say, a medium-term perspective. Then I would still wait out because, as I said, this fall on the back of good volumes, not a healthy sign. The immediate support to look for is at 2650. Once that is taken out to 2600, I'm just rounding it off for convenience sake. But these are the broad levels to look at. So don't venture a trade on Reliance just yet.
Okay, let's quickly switch focus again back to earnings. Newgen Software declared a very robust set. Rucha's here to break it down. Of course, stock fell off a cliff post those numbers, but first off, Rucha.
Thanks, Hersh. So you rightly mentioned the stock is down about 5%. Now, this is largely profit booking because the numbers are very good. Well, revenue was up about 23%. Margin came in at 23% versus 19.5% on a year-on-year basis. Net profit has come up by around 47%. So pretty healthy numbers, but still the stock is down. We'll know more about this from the commentary from the management to be held later in the evening. But let me talk to you about the segmental breakup. Well, India, which constitutes about 31% of the revenue, saw in margins at about 14% versus 20% last time. So a little bit of softness in the India business is what we can see over here. But what was strong is the EMEA segment, which came in at about 30% margins and contributes about 33% of the revenue. While US, which contributes about 21% of the revenue, largely came in at about flat margins, 19% of margins versus 17% last time. Now, implementation and other services contributes the highest revenue at 22% for the first half of FY25. Now, in the recent time, the company has bagged a lot of orders. For example, on 26th, the company received purchase order worth about 25 crore. On 30th September, it received 3 orders. The subsidiary received a $1.5 million award. It also received a letter of intent worth about 17 crore rupees and another purchase order worth about $1.5 million. So pretty much happening in the company. Talking about the stock performance, well, in the last 6 months, the stock has zoomed up by about 73%. But as I mentioned, we'll know more about the results from the management on the call today evening.
I think, and it's an update that we'll give to our viewers tomorrow morning about what Newgen had to say, because it was a great set of numbers and the stock duly corrected, maybe because it had run up so much so soon. Gentlemen, all three, to Rucha, thanks for that. And Vineet, Aditya, Kush, thank you so much for joining in today. A minute and a half left for the markets to shut shop, so we'll quickly wrap up the markets for the day today. Bring up the large caps, and it's been a listless day of trade, if you will, about 0.25% lower despite banks doing well, because IT, I reckon, has been sulking a bit. So that's one pain point. But the heat map will show you very quickly why IT and why some of the others. So Wipro, one principal mover lower, Tech Mahindra down about 1% as well. The big loser is HDFC Life, of course, 3.5%. The Bajaj Twins down. Reliance down 2% is a key culprit as well. And not too many things negating it. ICICI Bank amongst the heavyweights. That's it, because otherwise BPCL, Britannia, Bharti are all lightweights from an index weightage perspective, and that is what is weighed on the index today. Harsh, broader end of the spectrum?
Yeah, let's pull that up. Let's first pull up the, there you go, the mid cap, 1/3% higher, so we're off the day's lows, well off the day's lows if I can call it. So the broader end looking very different. 1% higher on the Nifty small cap as well. As Niraj correctly mentioned, the heavyweights are actually weighing down the Nifty 50 and therefore not reflecting on the broader end of the spectrum. Let's pull up the advanced decline, see how that one is shaping up. And there you go, even Steven. It's been that kind of a day, but we're closing even Steven nonetheless, even at close. Let's quickly pull up the BSE 500 stock list as well. Try and see the top gainers, top losers. There you go, Angel 1, no surprise there. Very strong numbers, 18% higher on the back of that likely Motilal Oswal also making a very similar move, 11.5% at close now. 5-star, 9% higher again. Suntech again on the back of numbers. It's a numbers heavy day, frankly, especially in the broader end of the market. Suntech up 7.5% and took with it the entire realty pack. So you had the Nifty Realty up 2.5% on the back of that as well.
Yeah, even the Network 18 TV18 twins for 2-3 days on a trot now they've done reasonably okay. So something happening there.
Yes, and the Nifty Media also did fairly well today on the back of that, of course. HDFC Life again another earnings culprit this time around, 3.5% lower. That's kind of wrapping up what we have.
With that, it's a wrap. Thanks so much for tuning in, and we'll see you with live markets tomorrow at 8 a.m.